Hello again, everyone. Thank you for tuning in and watching. So, my clickbait thumbnail of the week is sell now. I do say this once in a while when I believe we're at a point in the market where it's good for sellers to sell. Now, I'm not just telling everyone to sell that owns a home. Certain people that own homes that have an investment property, or maybe you're hanging on to that second property. Maybe it was a parent's house that passed away. Whatever the case may be, if you have a house that's not needed, you probably want to think about selling it now because I believe it is a good time. I will get to the buyers in a minute or in a few minutes and to let you know what I think about buying. But anyway, let's start with the selling. So starting off with the prices. Prices are declining. We are in a declining market. There's no doubt about that. If you go back to the last 3 years to 2021, prices, besides the peak, they went up. But overall, if anyone had purchased in these last 3 years, the best case scenario would be break even at this point. And you can see the clear trend. Prices are trending down. So again, sell while you still can before they trend down even further. So now looking at the GTA, I just ran the numbers. January has still got 2 days left when I ran the numbers. It's 1 day left as of today, but I did this last night around 9 p.m. And you can see they just reached an all new low in January. Still 2 days to go, but I don't see that popping back up from 2 days of data. And they're down 4.3% from December month over month. So again, prices are declining. We are going to enter into the spring market now. So again, this is a great chance. If you're going to sell, catch the spring market. I can't say how good or bad it will be, but I'm guessing there will be some seasonality in it. So again, if you're thinking about selling or if you're holding onto that property, hoping the market's going to rebound and prices are going to go to the moon again, I don't think it's going to happen. Again, this is advice for people that have that extra house to sell, not for people that are just selling and exiting the market. I don't recommend selling and exiting the market unless you got in recently and you're in trouble. Then yeah, then maybe you need to do that. But if you're going to sell your house and buy another one, it's not so important that you do that right now. You can capitalize on certain seasons when you're doing that. But again, this is for people with that extra house, investors and whatnot. One more metric I want to look at is the new housing price index in Canada. This is as of December 2023. You can see the house prices. So the cost to build a house, or the house index, not the land, has come down from the peak, and it looks like it's continuing to trend down, meaning, the cost of those new houses are coming down. It's not going up. It doesn't matter how many people immigrated or landed in Canada. Prices of new homes have come down from their unreasonable highs. The cost of the land, it says use with caution. This is from Stats Canada. Of course, they can't track land as accurately, but I have seen land come down in my area in the one subdivision that I can easily track it. But again, it's hard to track because a lot of times, or most times, land is sold directly to developers, and then developers sell it directly to the builders and they work deals. So it's hard to track the true cost of land, but I do see it coming down in my area. The next reason is due to the rate hiking cycles and how they play out. And I've talked about this before. Here are the major rate hike cycles in Canada. This is the elapsed time from the first hike to the first cut. So in 2022, we had our first hike in March 2022. We haven't seen our first cut yet, but historically, 41 months in 1978 to 81, 28 months, the next period, 42 months, and then 27 months. And of course, as you know, there has been lots of speculation on when these rate cuts are going to happen, and it's been priced into certain markets, and other economists are also calling for, first it was the spring, and now it's the summer, but it is most likely sometime this year by the looks of it. And that will put us right on track with this chart here. If it's in the summer, that will be another, 5 months from now. So that'll be 27 months. So it puts us right on track with these historic cuts. And again, this is not rocket science. This is just the economy and the interest rates doing their job. 3 of the last 4 rate hike cycles ended with a recession and high unemployment. The only one that didn't was the dot-com bubble, and that still ended with higher unemployment, but we didn't actually have a technical recession in Canada at that point. So it looks like these cycles, if we're on mark again, we're going to see these rate cuts come and a recession happen, which, of course, I'm not talking through my hat here. People are calling for recessions, economists in the Bank of Canada. They know there's going to be an economic downturn, so don't be surprised when it happens. Which brings me to my next chart, which is the rate cuts and what happens with real estate prices. So historically, real estate prices start dropping or continue to drop depending on the cycle when the cuts start happening. This is because we have higher unemployment, we have weaker economic conditions. There's a lot of talk out there, and I wanted to bring up one more point on these talks that I have and these conversations that I have with people where people say, well, when they cut rates even 25 basis points, the real estate market's going to rip again. Now, there's two problems with that theory. People kind of offset that difference in house prices. So house prices will go higher, rates will be cheaper, so it'll cost the same. Right now, houses are unaffordable. So thinking that the economy can sustain higher house prices with cheaper interest rates to net you the same monthly payment is preposterous, in my opinion. So, of course, that's not going to fix affordability, which is the major issue with the housing market. The next thing is the fixed rates. Fixed rates have dropped 1% since October, since the bond yields have come down. And where are we? House prices have been trending sideways and actually dropped in certain areas. So that doesn't support the theory. We're paying or we're getting mortgages, fixed rate mortgages, which is a very prominent product with first time home buyers and families and everyone else. And we're not seeing house prices go up, yet we're paying 1% less interest for all these new mortgage originations. So, yeah, don't believe that hype when people say, oh, once the interest rates start getting cut, the market's going to take off. That is not proven with any data, and it's infactual or it's factually incorrect. And here is the unemployment chart. Of course, the interest rates have been doing their job like they're supposed to, weaken the economy, increased unemployment. And here is a chart showing that. And of course, if you follow the unemployment numbers, you know they've been creeping up. They're almost up 1% from not even a year ago. And the last reason I want to talk about is that happy and high feeling, like people are at the casino winning lots of money and they can never lose. Well, that's been the real estate market for many years now. And people still have that feeling when it comes to house prices. Like it happened before, it can happen again. I won all this money and I'm going to keep winning. And the worst people, they say, at the casino are the winners because they keep coming back for more. And we've seen that with the real estate market. So I guess it's the kind of the common sense that takes over the logical part of the brain that says, well, it's happened. It defeated the odds. The fundamentals didn't make sense. People couldn't afford homes, but it just happened. So it's going to happen again. And it was a great feeling. While I'm on that casino topic, I want to go over one article that just came out recently. This one's from Better Dwelling, but there's many, all the mainstream media actually covered this article. Vancouver laundering model that inflated home prices moves to Toronto. So, of course, in 2017, actually even before that, a lot of organized crime, they were laundering the money in the casinos, bringing the money in, getting it exchanged for chips and washing it and buying real estate in Vancouver. The RCMP, they got involved, but they don't know how widespread this was. So they just caught somebody, it was actually in the Niagara Falls View Casino that did the same thing. And I want to read you just one little piece of a paragraph to explain how it happened. A patron previously identified as high risk sat at a gaming table in the Salon Privé, a high roller gaming area. They pulled out $80,000 in bundled cash from a grocery bag and traded it for chips. After the cash was counted and confirmed by the staff, the patron left with their chips, not playing any hands. So of course they've done this in Vancouver, and they literally just walked in, and the casino here was charged because no one said anything. I don't know how they found out about it. It's in the article most likely. I'll leave it in the description below. But of course, why are they doing this? Well, they're laundering the money in Canada. They're bringing it from overseas or profits from drugs, and they're laundering it. And a lot of the time, they're buying real estate with it. This is what happened in Vancouver, and of course, now they feel that this is happening in Toronto. And a lot of people talk about laundering money and how our real estate is propped up by laundered money. And I don't know how widespread it is, but it seems like it's still happening. So pretty unbelievable, in my opinion. So now on to you buyers. I know there's a lot of buyers. There's always pent-up demand out there. So don't buy the pent-up demand story. There's always pent-up demand. People will always be buying in any market. It depends on how much pent-up demand and if those people can afford. The problem is now they can't afford. Even with pent-up demand, they can't afford to buy. I talk to multiple people almost every day. Sunday, I was on 3 calls in a row on Sunday, phone calls in a row for like 2.5 hours. I was on these calls with people asking the question. And of course, I put on X, I put on my, stir the pot post. Of course, I like to do this. What can I say? I'm guilty. But this is what I said. This weekend, I talked 3 families out of buying a home right now. It wasn't hard as they agreed with me. They just wanted to hear the words that too many other agents wouldn't say. I did talk to one who seemed like it was the right time. Now, I probably should correct myself. It was probably more like 4 people, and I didn't talk them out of it. I just didn't talk them into it. So, a lot of agents, you'll call up and you'll say, "Look, is it a right time to buy? I'm renting for this much, and I really want to get into the market." And of course, 9 times out of 10, from what I hear, because I don't call the realtors, but this is the feedback I get, they say, "Yeah, now's a great time to buy. Get in for this reason." There's always a reason to get in. Now, this post I made stirred some controversy. I had people telling me I'm going to get sued for advising people. What if they should have got in and prices went up and they're not making all this money? And it was very controversial, this post, and I got a lot of feedback on it. A lot of good feedback too, mind you. But I wanted to just talk about one of the people that called. And again, I didn't talk them out of it. We talked about it and they thanked me and we went on from there. But I didn't tell them, don't buy. I just explained, we talked through it. So usually there's an emotional reaction and they're looking for emotional support almost. So the one example from the weekend, talking to, actually it was somebody close to me, but they saw a house that was for sale. It was 599,000. They said, "What did this sell for?" Because it was on the market for one day. I said it sold for 650,000. They said, "Wow, that went way over asking." I said, "Well, it was listed obviously under asking." And we looked at the house and I compared it to a house one of her friends bought last year. And I said, "Did you think your house or this house was worth more or less than your friend's house that paid 680,000 last year?" She said, "Well, this house is a lot nicer." And I said, "Okay, so there's my first point. So there's a lot nicer of a home right now for 650,000 that you could have bought compared with your friend last year for 680, and that was very clear." My second question was, "What are you paying in rent?" This person's paying $1,800 per month in rent plus utilities. This house was 650 with a good down payment of 130,000, 20% down in that case. They would have been paying $3,500 per month, including the property tax, just to carry this house. So they're giving up $100 to $130,000 and they're doubling their monthly housing costs. And then I broke it down further. I said, okay, $2,100 of that monthly payment is going to interest. Now you're paying more interest per month than you were just for rent. So you have to give $100 to $130,000 cash to double your payment, and you're not even getting any of that in your own pocket. It's not going into equity. You're paying more in interest. So it didn't make sense. And she quickly agreed. She said, "You know what? You're right. Yeah, you're right. I'm going to wait. I'm going to wait." But they look at the house and they want to move in. I understand people want that house. We're humans. We have that natural instinct. We want to nest. We want a place to call our own. But if you're doubling your rent and you have to suffer to do it, it's not worth it. And of course, prices are not going up. They haven't been trending up. The market is slowing. The economy is slowing. Uh, Sooner or later, affordability will return. A lot of what I see is the FOMO still. It's, well, maybe I should buy while the prices are low. They think they're low. They're not low, but they're lower than they were. So they say, like, maybe I should buy now because what if prices go up? And so the next conversation I have is, what if prices go down? What if you buy this house and prices go down and it's worth $100,000 less next year? And that $100,000 is not the bank's $100,000. That's your 100,000 that disappears first. And you're paying double from what you were in rent. Is that good advice to give to the people when I talk them into a sale? No, it's not good advice. So regardless of what's going to go up and what's going to go down, if you can eliminate all that from the picture and you say, okay, forget about prices going up or prices going down. What is it going to cost me? Does it make sense right now to buy that house? Is my payment going to double? Well, then it doesn't make sense, in my opinion, unless you're paying really cheap rent, $1,000 a month. But if your payment doubles, it's not worth it. You have to wait until it makes sense, till it makes financial sense in your monthly bills that you can afford to move. Then it will make sense. Then you have to assess, okay, what if prices go up or down? Well, it doesn't matter because I'm going to stay there for 10 years. That's fine. If you're prepared, as long as your agent tells you, look, the market's volatile. It could go up, it could go down. I'm not a fortune teller. There are certain agents, certain people that think differently. They think it might go up indefinitely, and other people like John Flynn over there thinks it's going to go down based on his stats and data, obviously. But if you can accept the volatility, just like if you're investing with an investor and they tell you they do, know your client, here's your risk tolerance, that's fine. But if you're working two jobs to pay for that investment when you can't really afford it, it's not a good decision. So again, what I'm saying is certain people, they're not even at that point. They don't know. They haven't had that conversation. And when I say I've talked people out, I didn't talk people out. I just talked them off the cliff from jumping into something they shouldn't be jumping into. So at the end of the day, when you're thinking about buying or getting into the market, again, this doesn't go for people buying and selling that are already in the market. You need to upgrade your house. But for people getting into the market, I have two pieces of advice. Get your emotions out of it. Think logically about it. Don't think about, oh, I want the house and I want to have my Christmas dinner there and I want to have a place to call my own. That's okay to think about, but get your emotions, get past that point, and then run the numbers. Get a mortgage calculator, run the numbers, put the property tax in there, maintenance. Does the house need work? There's a lot of extra costs with owning a house. And if those numbers are nowhere near what you can afford, or if you're not comfortable with those numbers, I wouldn't be getting in. I wouldn't be getting in for the next 5 years. I don't care how long it takes. If it doesn't make sense, don't, give your left arm or your firstborn to get into a house. It's not worth it. Anyway, let me know, as always, what you think in the comments. And until next week, I'll see you then.